Hello, everyone. Thank you for tuning in today. Thank you for tuning in to Broke Dad CPA. I am a licensed CPA. So again, all the stuff that I provide is through within my experience as well as my education that I've had in the accounting and tax profession. There is not a one size fits all, but today we're going to be talking about W-4s. This is my first video, so I figured that this was a good one as we're approaching close to the end of the year, and it is a frequent question that I get asked from my clients in regards to filling out their tax form. I will have future videos, so please subscribe, like my video, and if there's anything that you want to know about as far as just anything in general, I'm happy to talk about it. Happy to give, educate everybody. So again, that's kind of what my goal is here to educate you both on taxes, anything in finances, accounting, so whatever it is that anyone needs. So the way we're talking about filling out this form is the way that I would recommend filling it out. Again, may not be a one size fits all, but it's the most simplified way that I always like to suggest to my clients to fill out the form. So I think the first few boxes are fairly self-explanatory. You'd fill out your name, your last name, your social security number, your address, city, town, state, and zip code. A lot of these are also electronic on the payroll websites, so they might look a little bit differently, but the details within the form are pretty much the same. So again, this was on the IRS's website, so you're able to pull the form right off the IRS's website if you wanted to fill it out. Now again, going to box C, this is what I find is the most important box, and this is really where a lot of people get confused and tripped up. So I do just want to say is that this form is an estimate based on estimated tax brackets that are posted by the IRS. People's tax situation changes as the year progresses. So again, not everybody has a crystal ball. You don't have a crystal ball and you can't predict what your tax situation is going to be at the end of the year. For the most part, most people's income, if you work a single job, you and your spouse, or if you're single, if you work one job, your situation maintains about the same. So there is somewhat a little bit of a predictability in here, but again, I like to just keep it simple. Because it is an estimate, I just say keep it simple. This form does not get filed with the IRS. It gets kept within your personnel records at your employer. So this way, your employer has a record saying, Joe Smith filled out the form this way, and this is how we withheld on his paycheck. And then you always have a record as well of knowing how you filled out the form, because your employer will keep it within the record. So let's talk about the filing statuses. So now filing statuses, which are down here, these are based on what you are on the last day of the year. So on 12/31, will dictate how you file your 2024 tax return. If you are single, you will be if you're single on 12/31, you will be single for the year. If you're married on 12/31, you will be married for the entire year. So the biggest misconception here is people who are married filing jointly, check this box here. Now, if both spouses work, this box is going to be incorrect because it's going to cut your tax brackets in half, and it's only going to assume that one spouse is working, and it's only going to withhold your wages assuming that one spouse works. So if both spouses works and have income, I'd always suggest checking this first box here, singled or married filing separately, even if you file jointly for your return. My suggestion for checking this box for married filing jointly is only if one spouse works. If one spouse works, then you can check this box. But if you want to have a little bit of a cushion, again, you can go with the married filing separately as well. But I think for the most part, the married filing joint box with one spouse working works pretty well. So again, if that's your specific tax situation, that's what I would suggest to do. Head of households are for single individuals that have dependents. If you have dependents and you're single, you are able to claim head of households. No other situations would really allow you to claim head of household. So again, I just caution you on checking that box. Just verify that you meet the requirements of head of households, and I'll probably get into a video later on about specifics of filing statuses. So that's kind of just really like a brief overview. The next portion of the form here is step number 3. So again, you can go to step 2, but I think step 2 just complicates the form way too much what it needs to be. Again, this is if you have multiple jobs, but I feel as though it complicates the form. So I always suggest not to fill it out. As well as if you click that married filing joint box, you'd have to indicate your spouse's income down below as well. So I just say skip part 2, go to step 3. This step as well, I always like to say put zeros. again, going on the assumption that it's an estimate as well as being conservative. I think most people don't want to have a tax bill due at the end of the year. So with that being said, I don't think I'd want to put any deductions in here. I wouldn't want to put any dependents. I wouldn't want to put any of my itemized deductions. I wouldn't want to do any of that. If the one time where I would say you maybe want to put that you have dependents, if you have a large family. So if you have three, I would say if you have 3 kids or more, you should put it in here. So if you have 3 kids, I'd probably put 1 in here. If you have 4 kids, I'd put 2 in here. If you have 5 kids, I'd put 3 here. I wouldn't put every single one of the kids because, again, I like to use a little bit of a cushion, and things change throughout the year, so I'd like to leave a cushion in here. The next item down here, again, you can fill it out. So this is other income from other jobs or other sources, whether that be dividends, retirement. You can put it there, but I'm not a big fan of putting it there because I just don't trust the form. I'd rather fill it out myself. So meaning I'd rather put the actual tax in below down here in Part C, or an estimate of that. So Section C is the section that I really like to use. So if you had a balance due last year, what I like to do is I would take, say it's $2,000, and you just want to do it on one spouse's. So in this particular case, we're saying married filing joint. I had a balance due of $2,000. I would take $2,000. I get paid bi-weekly. So over 26 pays, I would do that out. And it ends up being roughly about $80. So I would put the $80 right in here. So what's going to end up happening is they're going to take the married filing separate, as what we had indicated, because both spouses are working. They're going to take that amount, so say that's $200, and then they're going to go and they're going to say, okay, well, wait a minute. You have $80 over here of additional that you want withheld on every pay period, so they're going to take $280 out of your paycheck each time. I'm just using round numbers. They're not actual numbers. That's the way that I like to tell my clients to do it. Now, similar, if you have untaxed earnings, so let's just say you have another job, whether, that you get a 1099 for, and you're like, you know what? I don't really want to pay estimated taxes. I don't want to have to deal with that. I don't want to have to worry about that. I'd prefer not to. So you can use the same example that I just provided and take what your balance due is at the end of last year and then just divide it up amongst your pay periods of your main job and then put that amount down there. And again, if you think you're going to make more money, you can always increase that. And if it's a brand new job, I always like to say, refer you to your tax return. You can figure out your effective rate. We could talk about that in a later video when we can talk about specific lines on the tax return, but figure out what your effective rate is. A lot of tax programs, like if you use TurboTax, or if you use a CPA, there'll be a summary page where it tells you what your effective rate is. So say your effective rate is 20%, whatever you anticipate earning. If it's, say, $10,000, I literally would just, again, and it's just an estimate. It's not going to get you 100% of the way there, but it'll get you close enough where you either are going to end up with a refund or you're going to end up with a very small tax bill. So if, say, you anticipate to earn that $10,000, in my effective tax rate is 20%. I'd take $10,000 times that by 0.2. That comes up with the $2,000. And then again, I'd take $2,000 and divide it by the total pay periods, and I'd put it in here. That's only if you have another job or if you ended up with a balance due. Other than that, I wouldn't do anything else with this form. I would sign it, date it, and send it back to my employer. Again, I think a lot of times we like to overly complicate it. This form was revamped with the Tax Cuts and Jobs Act. It took it a couple years. I believe it was in 2020 was when the actual form was revamped. And when they did that, they really tried to mirror it up against the way that you file your tax return. And I think they just overly complicated it. And I mean, taking a look at it, look at the number of pages, within here. I mean, it just makes it complicated. And I think you can stick with just a single page and just fill out the single page. Again, this is the way I tell my clients to do it. So that's the way I'm suggesting it. And I think that way you're always going to be pretty close to where you should be. You should have a refund to maybe have a small balance due, but it shouldn't be anything that's any crazy. But you just want to make sure that you stick with that. And again, I thank everybody for tuning in today. If you have any suggestions, anything that you want to hear about, more about, learn more about, I'm happy to help any way that I can and share my knowledge and share my expertise on things. But again, feel free to like, share, and subscribe. And thanks again.